This is the briefing for Monday, February 5th. When I analyze the markets and I do these briefings, I try not to tell you what the market is going to do. What I try to tell you is how I've analyzed the market and what the potential probabilities are of one event occurring over another. There are never 100% certainties. So for me to say in an analysis that the market is going up tomorrow, and I am sure of it, would be fallacy, because there is always a chance or a possibility that things can change. There could even be overnight news. There could be a whole host of things that could happen that would change that analysis, and that you could see the market going down instead of going up. The problem that I encounter is that, and it's, once again, I've said this before, it's non-statistical, is that I look at a market and I analyze it and I assume that I can come up with an analysis that the market is going up, and I'm 70% sure of that. But then again, non-statistically, there's a 30% chance I'm wrong. So if the market starts to do what I think it's going to do at the open and I enter a position, then my job is to make sure that the market is not giving me more information that is telling me that I'm wrong, and that the 30% probability assessment of the market going the opposite way is becoming the greater probability. And therefore I have to take action based on information the market gives me with every tick that the market gives us each day. With that said, the structure of this market is very weak and deteriorating. Now, there are some positives, and it's going to be interesting to see what happens in tomorrow's trading. But these are hourly charts of the spiders, the Qs, and the IWM. Now, it's pretty easy to see, just looking at these three, that there's a pretty good intermarket divergence between the Russell and the other indices. Even in today's trading, there was a gap down in the Russell, and it closed some of that gap, but really didn't close the gap. No gap in the other indices. But I guess there was a gap, but it was retraced in the first hour of trading. A little bit of a gap that looks like it was closed on the spiders as well. Now, the question here is, and I was shocked, if you listen to the weekend briefing, I talked about the weak structure of the market, and that what happened this week was going to be very, very important to potentially the intermediate and longer term price development of the market. And you can see, even in today's trading, I was very surprised. I thought, well, this is the beginning of something greater that could develop into something more of an intermediate term move to the downside. And look what happened with market breadth. I mean, market breadth deteriorated even more than what we saw on Friday. Really amazing to see this rotation up and that it was sustainable. Now, the question facing us is what happens tomorrow? Now, from my perspective, I think that if the low of today is taken out from a short-term time frame, that's going to give us the potential for a pretty good move to the downside, at least testing the low from January 31st and potentially greater than that. And the same thing with the Qs. Trading below the low of today would then suggest the potential trade down to the low of the 31st. And then, of course, trading below the Russell or the IWM would suggest the same thing. Now, you can see also that as we made the low today, volume was pretty good at the open, and then we had this rotation up. And look what happened with volume on the rotation up until we get to the last hour of trading, and you can see that we got a spike in volume. Good volume on the Qs on the opening move to the downside. A low was made in the first hour of trading, and then volume absolutely fell off and collapsed. The same thing with the Russell. So there is literally, breadth is screaming that the market is weak. Volume is screaming that there's a lack of buyers in the market, even though price is able to move higher. There's just not enough selling pressure to run over those who are buying the dips and trying to push this market higher, which is potentially the fault of the higher weighted stocks in the indices that are still carrying the market, and some of them did have good earnings. Now, if we look at where we are in terms of overbought and oversold, we're at a point of being almost extremely oversold. Yet price has really not moved in the direction of to the downside. We've held up pretty well, but because of this and this, it suggests to me that what happens tomorrow could be critical, because if we take out Friday's high, then we really need to see breadth and volume beginning to confirm that and supporting that price move. If it doesn't, I fear that this market is in for a pretty good move to the downside. And once again, the probabilities, the way I look at it, are becoming greater that we're going to see something greater to the downside. But there is still some probability assessments that that's wrong. And all of this can change. But unless or until the structure of this market changes, the risk is to the downside. And that's the way I'm going to be handling my own trading. Now, looking also at what's occurred, this is the percentage of stocks above the 50-day moving average in the S&P 500 and percentage of stocks above the 200-day moving average. We had even more of a deterioration between this is where it was on Friday. This is where we are today. This is where it was on Friday. This is where we are today. In the NASDAQ, this is where we were on Friday. Right here, this is where we are today. This is where we were on Friday. This is where we are today. And then, of course, in the Russell, it is really getting hit. And you can see this is where we were on Friday. This is where we are today. And I should point out, I didn't think I did it at the beginning of this briefing, a lot of times the Russell will give an early warning signal of an impending move, whether it be to the upside or to the downside. And certainly the Russell is beginning to tell us by its divergence with the other indices that there is a lot of weakness in this market. When I look at all of these internals and I see what's happening in terms of price development, I have to just be very, very cautious over what can occur. Am I dumping the kitchen sink into the short side of this market? No, I'm not. And I won't, because I want the market to prove to me what I am seeing as potentially the higher probability. And that would be to begin trading below today's low, would open up that. Trading below the low from the 31st would then suggest the potential for a greater move to the downside. And then, of course, looking at the support areas on the longer term charts would be the next levels of support, and judging and analyzing as each one of these support levels are approached or traded through. Is the move to the downside strengthening or is it weakening? And the same thing, if we trade above Friday's high, then what's happening internally? If the internals are still weak, the risk is still to the downside. If the internals are changing and strengthening and supporting that move, then the probabilities are beginning to lean towards more of a rally and higher prices in the indices. So right now the jury is still out, but I am being very extremely cautious with long positions right now, because this market could open up any day based on what's happening internally, and we could see a fairly decent move to the downside. Have a great night, and I'll pick this back up again tomorrow, and it should be tomorrow's should be a very, very interesting day. Watch for a potential for a pause based on the fact that we are at a point of being extremely oversold. Also, I should state that just because this is extremely oversold, it can become more extremely oversold. So it does not preclude the market from trading lower tomorrow, but this does suggest the possibility for potentially a pause or some type of move to the upside with potentially some strengthening within the internals. But I would be very cautious to suggest, and I'll analyze that tomorrow, whether that strengthening is eliminating the divergences that we're seeing in the market in the internals today. And there are many of the internals that are just showing extreme weakness. Have a great night, and I will pick this back up tomorrow.